The markets were crazy again today. We have to give a Tesla update, and there's something really interesting that I have to share with you. I am Dr. Stock, Doctor of Education, and do you know what bird is the most helpful? It is the one that is always there to pigeon. We are going to do some technical analysis with the SPY, with the Qs. I have something really interesting to show you on the charts. I'm also going to take a look at Tesla because I covered it in my previous videos. And man, oh man, did it have a day today. I'm going to tell you how I did in the market today with some of the plays that I made and how I was set up for it. Those plays can be seen over at the Patreon through the Discord that's available over there. And then I also want to let you know that I have my portfolios amplified, my options course that I'm building out over there available at the Patreon as well. And Tesla stock price prediction, which I'm going to update and re-release a video, put out a new video, I should say, over to the Patreon as well, updating the earnings forecast for Q4 and then that outlook through 2030 as well. And then I will be showing you the Moomoo app in this video. We'll talk about how you can get those free stocks later on. In the meantime, let's get right into the charts, see what we have going on in the SPY. And this is going to come back around later in the video. Let me zoom in on this. I actually think that with this most recent touch that we've had here on the 50-day, look at that. We hit the 50-day simple moving average, just this thin blue line. Let me get rid of the Bollinger Bands for a moment just to take away some of the noise that we see on the charts. There we go. So down below this trend line, there's a thin blue line that's in here. Let me see if I can get a little bit better look for you. There you go. And you can see that we just barely tagged that, quickly retreated from it, and then over the next several days, we've just sold off incredibly during that time. And man, oh man, what a thump that has been. Let's break this down to the hourly chart and take a look at what we have going on. You can see the sell-off that we sustained. I think it is possible that tomorrow we see a little bit of a bounce back up. We'll see if that takes us back up to 428 or so. That would be a reasonable bounce that we could take. If we look at the RSI on the hourly chart, we are down near oversold, but when we go back out to the daily, we have just crossed back over the 50 line. When we look at that, let me extend that a little bit so you can see where we're at right now. As we look at that, where does support come in? Right at about 420 is where we're looking. That's that 200-day, and breaking that 200-day is pretty serious business. You could see the last time that we actually broke the 200-day, and should we do that, wait for the retest, because that's most likely when you start to hit the next rip downward. Hopefully we don't hit that point, because that means that something can be pretty wrong with the markets when we look at that. So I do think it is possible. We have a little bit of bounce, at least to start tomorrow. We'll see if we close off at about even or a little bit low. I think that either way, the market has a way of leaving us with a cliffhanger ending to wrap up each week. So we want to watch for that. Possible bounce in the morning. We'll see where the market takes us from there. We have a few Fed speeches tomorrow, but no real other catalysts coming up to look for. Just a quick look at the Qs as well, and then we'll get into Tesla from there. So I've also updated the Qs to give this bearish channel look that we have, and you can see we are down below. Let me take off some more of this noise that we have on here. We'll get rid of the EMAs, and you can see we broke down below the 50. I'm also going to get rid of the Bollinger Bands that I have here. I'm sorry, the Fibonacci's that I had there. And we broke down below the 50-day, came back up and tagged it today, and then it just wasn't enough to hang on. And look where that puts us for that price. That's another thin blue line that you have going right across here. We are almost at that support of 357. 360 is about where we find ourselves, and we're actually at 359 in the post market right now. So 354 could be very important to us, also 357, and we are still well above that 200-day. That, my friends, because when we look at QQQ, we're looking at something that tracks the NASDAQ 100, and we know that the Magnificent Seven are in there, which means that big tech earnings, which start next week for a lot of the big tech stocks that are out there, Google, Amazon, Apple's in November 2nd, which I think is 2 weeks or so. It's a little bit farther out than what we have, but most definitely worth watching when it comes to big tech. I'll get all those dates down. We'll look at different videos for that, and it is worth. We'll put up Netflix too. We'll put a bonus in there. So NFLX. So this one, I was like, man, I'm leaning bullish on their earnings. You know, I don't quite have that sense yet. And man, oh man, what happened? We got a 16% rip up today on Netflix. That was incredible. That they had a huge subscriber beat. That it looks like their password sharing measures that they have, locking down on password sharing, has really worked for them. And I think, from what I recall, and I haven't looked too deeply into Netflix, I did more work on Tesla, but I think it was like a 20 to 30% beat on subscribers over what was expected. So it's a big day for Netflix. I know there's a lot of people that were talking over in the Discord today about going short on Netflix for tomorrow. And I got to say, that might be a pretty good call. My daughter had a doctor's appointment, and I didn't get a chance to plan things out for tomorrow at the end of the trading day today. So we'll keep our fingers crossed that they're on the right track for that. And I think they have a good shot at seeing a little bit of softness come off of that. It is noteworthy that we did close up on top the 50-day. When we look at Netflix, that's a bullish thing. It doesn't mean that we won't also come down below it, but you can see that we did have a low price on this coming in at $392, and it still managed to close at $401, so just over $400. And I said also in the Discord that $400 was going to be an important number. All right, let's get over to Tesla, because this one is one that I know a lot of people are excited about. We got so darn close to that 200-day, and that 200-day comes in at 214 right now. As we look at it, huge trading volume, which means, and let's go down to the hourly chart to get a better look at this. There we go. I took a put option position on this. I ended up it worked out very well for me for that put option play, even better for other people in my Discord that have a little bit more of an iron stomach than I do when it comes for some of the different moves that we see, that I tend to go bird in hand and take the profits as they come along a little bit quicker than other people. It keeps me in the game, keeps me profitable, keeps me from getting greedy, because man, oh man, would I absolutely love to hold on for more. And I just, it works for my style to take those profits sooner than later. And to anybody over in the Discord who was following me with that and did your own research and due diligence and bought in the Tesla puts, man, they paid off today. It was awesome. Link for the Patreon, by the way, is down in the description if you guys are interested. I'll talk about my results later on in this video. So Tesla, where in the world is the bottom of this thing? Because that's what people keep on asking about. I can tell you that this 200-day is important for us. It is possible that we end up breaking down through that with where we're positioned near the 200-day, with the 50-day that has gone flat and actually moved somewhat downward on us. Maybe we get a death cross coming up sometime soon for Tesla. Well, where in the world can that put us? 200 is going to be a very important number, and that 200 ends up falling right at about here, and maybe that's where we start to see the support firm up for that, when the market influence on this is also going to be big. However, Elon came out and he sounded very cautious when he spoke, and it was not a very celebrated earnings call. I think that it was kind of a dour look on what we had for that. So for Tesla, that $200 mark is going to be crucial for us. Should we fall down through that, man, oh man, things could definitely get ugly from there. And I know a while ago, people were talking about $150 for Tesla stock. Do I see that coming? I don't know. I mean, the market does overreact to things. And I think that this is a very myopic view that we're seeing in the price action right now, that it's not a long-term view. And there is the idea in Wall Street that sometimes that your money's better used elsewhere in the near term before you kind of circle back to a place and put it more to long-term use. That could be some of what we're seeing. I think there could be some panic selling that's going along with this as well. Definitely some profit taking. I know that I was part of the group that went short on earnings as well, so I'm sure that I had a little bit of downward pressure, but I also bought more Tesla today. I used this opportunity to dollar cost average into my long-term position on this one, and it was on the house, or I should say it was on the put option that I played. So that one was most definitely paid for, and then some. So let's go back over to this here. So that's Tesla. Now, about the interesting that I want to show you, there's a few things that I need to talk about here. So Jerome Powell came out and spoke today, and people saw it as relatively dovish, and yet the market sold off anyway. So he didn't really tell us anything new, I felt, as I listened to it. It sounded more like just repeated of what we could hear for higher for longer. But I do want to share with you the CME Fed Watch tool, because something changed on it that I think is pretty interesting. And then I have the other really interesting thing to share with you on the charts, along with the SPY. I want to show that because I think that that's going to be incredible for us to take a look at, because it could be very indicative of when we start to see things turn around for the markets. So this CME Fed Watch tool, and what we're looking at right now, we're looking at November. And this bar, when I first saw it, I was like, oh man, we're 97% chance of a rate hike now? No, that's actually the current rate, 97%. So still near certainty that we don't get an increase. But interestingly, super interestingly, in my opinion, 2.8% chance that we actually get a cut on November the 1st. I was very surprised to see that, because I didn't expect to see that come up. So what does that look like when we go to December? We'll go out to December. And when you go to December, you can see that we still have that chance of being where we're currently at right now, 75% chance, and 25% chance that we see a rate hike happening in December. But I have something else to share with you, and this goes back to August. So I have this right here, and I'll have the thumbnail for it, but it's titled CPI Report from July. Take a listen to what I have to say in this video. It's at 5 minutes and 57 seconds in, and it takes about 2 minutes. Listen to this now. So about the forward look for inflation, based on the research that I've done and talking about the year-over-year numbers on a core basis for CPI, August, September, October are typically where you find the minor high peaks, if you will. The highest peaks are February and March. So being that August, September, October are where we find those peaks, that means that July is typically, well, it doesn't mean that, but July is typically a low point for us. So this is going to be probably the best of what we're going to see, even though we are trending downward. It's not a strong enough trend downward to overcome the fact that somewhere between August and October is where we find that next minor peak in inflation on a seasonally unadjusted basis. So what that could mean for us and what that could mean for markets is that we could possibly have a little bit more of a rally going through August into September. And then when we get August numbers, and also we have the meeting in September from the Fed, like we don't know where those hot numbers are going to land. Sometimes August is still a little bit cooled off. Sometimes August runs hot. And then September is where you see that peak. Or sometimes September is a little bit cool, but you're like every month that goes by that you don't see that high read across those 3 months makes it more likely that next one is going to be that next high read that we get. So August, September, October, expect a peak to be in there somewhere. Expect an inflationary scare to come out like, oh my gosh, a resurgence of inflation. Expect headline numbers to not be incredible during that point in time, that we start to get a month or two that looks like we've stagnated. But the saving grace there is November, December is where we start to see the lowest values for inflation on a seasonally adjusted basis. And then by January, we should solidly on a core basis be down in the 3% range. All right, so that goes back to July's CPI, which came out in August. And I said back in that one about where the peak of inflation is and that we would have some big scare coming along. And well, that's pretty much where we see ourselves now. But that does, I think, indicate that possibly we end the year on the positive note as we see those inflation measures come in. And we looked at the CME FedWatch tool, and I think that they're seeing a lot of what I'm seeing. And I'm still sticking to my guns for right now. I said by December or January that we could possibly see that first rate cut come in. And I'm going to still say that that's a possibility that we see that. It's not looking like December at the moment. It's looking like January could be that time that maybe, just maybe, we finally see that. All right, so real quick, guys, check this out. Down in the description of this video, help yourselves out, help me out, sign up for Moo with your free stocks. Each stock is valued to $2,000 a piece. Here's the deposit levels. Here's the free stocks. The $5,000 tier includes Tesla or Google, one free share of one of those companies. And like I said, that Patreon, go ahead and check it out. If you want to see my buys and sells, how I'm playing this market, how I'm profiting from this market, you can go ahead and check that as well, both the upside and the downside of it, just as what I showcased with Tesla. So again, I'll talk about my results of that soon. I use options to amplify my portfolio, and this course will tell you how you can amplify your portfolio with the power of options. And then my Tesla stock price prediction, also NVIDIA coming up in just past the middle of November is when their earnings are going to be. You'll want to check that out too, because I'll put up an updated video for that, especially given the further ban for their components that they have, and we'll really start to find out where that price is happening. I'll put up that updated video on the Patreon as well in the very near future. All right, so one last time for the charts here, and then I'll wrap things up for you guys by telling you my results that I had from the trading day today that I shared all those buys and sells over at the Discord. So let me take that down and pop this up. And what we're going to go to is DXY. We're going to look at the index for the US dollar. There we go. So this, what you need to know about it is that strong dollar, typically not good for markets. A weak dollar, typically better for markets. And there's good reason for that. One big reason that a strong dollar is bad is that it takes more effort from foreign currencies to service their debt. And so that's not great because it impacts, whenever you look at the foreign exchange rate impact, such as for Tesla, I think they lost about like 400 million or something like that due to their foreign exchange rate. Not necessarily a great thing. So strong dollar, not necessarily great for markets. And we can actually see that directly. I'm going to hit the plus button right here on TradingView, and I'm going to type in SPY. And what I'm going to do is add the SPY to this. So when I put the SPY on, take a look at this. SPY is shown in orange, and DXY, which tracks the US dollar, is the candlestick chart that we have here. And don't worry so much about how they touch or how they overlap. Pay attention to the fact that the market's going up. This is the SPY here, tracking the S&P 500. Look what's happening to the strength of the dollar. It's dropping down. And then where does the market peak? It actually peaks sometime between October and December. I think it was a little bit later for the SPY, happened around December. And well, look what's happening to the strength of the dollar. As monetary policy tightens, the strength of the dollar increases because there's further demand for the US dollar. And like I said, it makes it more expensive for them to service their debt. That's one of the big reasons that we have, is that the way it cuts into corporate profits overseas. So that's one of the big reasons why we'd have that. But look where it peaked. This date is right in the middle of October of 2022 is where the strength of the dollar peaked. That is where the market bottomed. And so as the strength of the dollar declined, as we got through here, as we didn't expect such strong monetary policy to come through like we had throughout 2022, as those inflation fears subsided, as monetary policy, even though it's still very tight, even though it still got a little bit tighter, it wasn't expected to keep on going as rampantly as it was, and the demand for the dollar decreases. And then what do we see? As it decreases, the market rallies some more. As it bottoms, as the strength of the dollar bottoms right in the middle of July. So right there's about that July 18th, July 19th date, which is about where we saw a lot of companies peak. That bottoming of the dollar was about the peak of the market. As the dollar strengthens, what we see is the market dropping. I do have some good news for this, potentially good news. As you look at the RSI for DXY, for the strength of the US dollar, a weaker dollar is a better thing for markets. And what it's showing us right now is that we could possibly cross down over 50 in the RSI. And this could be something that shows that we're going to get some weakness coming into the dollar sometime soon. And if that is the case, then that means that the market could go back and continue some more strength as that decreases. The big decrease won't happen, though, until the Fed starts to loosen its monetary policy. And until the monetary policy really, really changes for us, we can expect a stronger dollar most likely to still be part of that. So we do want inflation to come down. We want monetary policy to loosen. We want the strength of the dollar to decrease so that the markets can experience more upside. And this isn't necessarily the only thing that impacts it, but I think we can see a clear correlation between what we see in the markets and what we see through the US dollar index. All right, so my results that I have, and then also when in the world I see this coming down. Honestly, between what I said about inflation, between what we hear from Jerome Powell, between what we see on the charts for DXY, I think that November, December could be very green for us. That this could be a very solid end of the year for us, the end of the fourth quarter, leading up into Q1 of next year. And of course, we're going to have to pay attention to the economic reports that are out there. We're going to have to watch for the strength of the consumer to see if it holds out. We're going to have to watch the jobs market as well to see how that holds out. There's a lot of other impacts besides just the strength of the dollar. But I think that is one big indicator that absolutely should be watched by us. So how were my results today? Well, first, I want to lead off with the worst of it, which was a small hedge position that I took against my Tesla put with TQQQ. So since I went short on Tesla, I went long with the put. I went long with the call option that I put on the Qs with the T. So triple leverage NASDAQ 100 ETF is what I went with. That was an 11% loss, but that was such a small hedge. It equates to literally a $10 loss. The rest of what I have to say was all profit for me. So 0 DTE options for an intraday trade that I made today on the Qs, 15% profit on that one. I did a second one using put options with the 0 DTEs. That was a 40% profit for me. And then the shining star today, of course, was that Tesla put that I racked up 89% profit on my Tesla put. And I'll tell you, if I had the steel stomach to hold on to this, that over tripled in price throughout the trade. As a matter of fact, by the end of it, it may have even quadrupled in price. Man, when I see that profit there, when it's 89% up overnight, less than 24 hours time, I saw the price of Tesla going back up. Didn't exactly know where it was going to be. Went with a sure thing with bird in hand. But I had somebody over in the Discord today. I don't remember. It was either 136 or 163% profit on their puts that they took out on Tesla, that they were able to stomach it and hold on a little bit longer than I was. I tend to be a little bit more reactive when I see those profits show up, that I tend to take them, especially with options, especially 0TDEs or short expirations. As a matter of fact, that Tesla put expires tomorrow. I did not want to hold on to it any longer than I had to. I'm very happy with my results. I know my patrons, my community is also very happy with the results that they've been getting. If you guys want to be part of that community, that link is down in the description. We'd absolutely love to have you come over and join us. They, my friends, are world-class people. Let them do the talking for the Discord and see what they think of it. And if you do join us and you're over there, then also, you can find out what you think of it. And if you like it, if it's returning to you more than what that subscription fee is, that's exactly what we're there to do. So thank you guys for watching. I really do appreciate it. Check out your free stocks from Moomoo. I am Dr. Stock, Doctor of Education. Remember, my friends, that learning is earning, and we'll see you in the next video.